Our theme is that the U.S. economy is indeed driving global growth. You haven't seen this in over 40 years. Classically, for the past 20 years, it's basically been the emerging markets, in particular, say, China, that's driving growth. That era is done. This chart most clearly highlights how, indeed, the U.S. is driving growth. It's a simple way the economics community tries to gauge the current state of the U.S. economy. It's asking companies, basically, is your business doing better or poorly? It's based on activity. And we think that the U.S. economy will indeed continue to drive global growth. 4 key reasons. I might add a fifth to that. Why? Inflation is one of the most important determinants of economic activity. If prices are going up very, very quickly, obviously it's a very difficult consumer and business environment. Inflation in the United States is actually pretty low at about 1.5%. Our banking system, it was a gut-wrenching recession. Our banking system obviously almost collapsed. The Fed came in, that's a whole nother story, supported it. Today, our banking system is on more solid footing. Third, I'm a capitalist. Companies are the key driver of this economy. Companies hire people, companies spend on capital spending, advertising, etc. We have some of the strongest companies in the world right here, and as I'll show you, they are indeed spending. Fourth, we have a strong investment cycle. By that I mean a strong capital spending cycle. You are seeing companies reinvest in this country. They're building big, dirty stuff like manufacturing facilities, including chemical plants, auto plants, airplane factories, and we also are certainly being driven by the energy renaissance. If I had to add a fifth point to that, which I would, it would be cheap energy. We are in a unique position. As an economist, as Stacy said, I've been in the business a long time. Any of the key leading indicators are always what our energy price is doing. I'm not ignoring negatives facing the U.S. economy. On the next page 4, I highlight tailwinds and I highlight the headwinds. There's certainly events around the world and domestically that could curtail what I think is going to be a relatively robust business cycle. We have a very, very clear slowdown now unfolding in China. China had been a very important driver of global growth, and so for many companies that will present a big challenge. And so that is going to be a headwind for particularly multinational companies in this country that benefited from the strength of their investment in China. The Fed is going to tighten at some point. I think the Fed should. We don't need any more, what I would argue, emergency central bank policy, as I'll show you as I go through the charts, that the economy is on more solid footing. Therefore, the Fed should be able to take rates up without disrupting tremendously the business cycle. Geopolitical, just read the newspapers this morning. Washington regulatory, again, read the newspapers this morning. Very high federal debt. To be sure, we have a very high federal debt, over 70% of GDP. We need to unwind that debt to really be on strong footing, but you can only de-lever if you grow. That is, the government deficit will only shrink if we have indeed long-term drivers of growth, which we do. So at the margin, I would be optimistic on that, but to be sure, we can't put in place any additional fiscal stimulus, thank goodness. Last, the rising dollar. Yes, the rising dollar will be a headwind for many companies who, again, have depended on earnings from outside of the United States. But do you want a strong dollar or a weak dollar? I think all of us take vacations. It might be nice for a change to actually not have to pay exorbitant amount in hotel rooms outside of the United States. I saw the Aussie dollar this morning is down sharply. I'm going to Australia in a few weeks. Maybe I can do a little bit more shopping down there. So yes, the dollar going up is a headwind for certain companies, but on balance, it's a positive for overall U.S. economic activity in that, 1, it makes it easier to travel for the consumers. 2, it makes it cheaper for us to buy products from abroad. It's going to keep inflation low. And as I said before, low inflation is indeed a very important factor driving global growth.